Are you tired of the complex world of investing? Ever wished for a simpler way to grow your wealth? What if I told you that there's a revolutionary tool that's changing the game for investors worldwide? Welcome to our deep dive into automated investment platforms, or robo-advisors. In this video, we'll unveil how these digital wizards make investing accessible, affordable, and incredibly efficient. From low fees to automated portfolio management, we're covering it all. Stay tuned to discover how you can start investing smarter, not harder, and turn your financial goals into reality. Trust me, you don't want to miss this. Introduction to investment. Investing is a journey that begins with a simple yet powerful concept: making your money work for you. But what does that really mean? Let's break it down. When you invest, you're essentially putting your money into vehicles that have the potential to grow in value over time. Think of it this way: instead of letting your hard-earned money sit idle in a savings account, earning minimal interest, investing allows you to put it into stocks, bonds, real estate, or other assets that offer the chance for substantial growth. For example, let's take a quick look at the power of compounding. If you had invested $1,000 in the S&P 500 index 30 years ago, it would be worth several times that amount today, thanks to the average annual return of about 10%. On the other hand, the same amount in a savings account would have grown much less. Investing isn't just about buying stocks or real estate. It's about creating a diverse portfolio that matches your financial goals and risk tolerance. It can include bonds, which are generally safer but offer lower returns, or mutual funds, where your money is pooled with other investors to buy a larger variety of stocks or bonds. It's essential to understand that all investments come with risks. The stock market can be volatile, real estate markets can fluctuate, and even the safest investments aren't entirely risk-free. That's why a key part of investing is not just about choosing where to put your money, but also managing and mitigating your risks. High-risk, high-return investments. Investing always involves a balance between risk and reward. High-risk, high-return investments are at one end of this spectrum, offering the potential for substantial gains, but also carrying a significant chance of loss. Let's delve into what this entails and why these investments might be appealing to certain investors. Understanding the risk-reward ratio. The fundamental principle of investing is that higher risks often lead to higher potential rewards. High-risk investments are typically more volatile, meaning their prices can fluctuate widely over short periods. This volatility can result in substantial gains if the investment's value increases, but it can also lead to significant losses if the value decreases. Types of high-risk, high-return investments. Stocks, individual stocks, especially in emerging or rapidly evolving sectors like technology or biotech, can be highly volatile. For instance, tech startups might skyrocket in value following a successful product launch or plummet if they fail to deliver promised innovations. Cryptocurrencies. Digital currencies like Bitcoin and Ethereum represent a new frontier in high-risk investing. Their values can swing dramatically based on market sentiment, regulatory news, and technological advancements. Venture capital. Investing in startups through venture capital can be highly lucrative if a company becomes successful. However, the risk of failure is high, as many startups do not survive long-term. Leveraged investments. Using borrowed money to amplify investment returns can lead to significant gains, but also increases the potential for substantial losses, making it a high-risk strategy. Why choose high-risk investments? Potential for high returns. The primary allure of these investments is the possibility of achieving returns that far exceed those of safer investments like bonds or index funds. Diversification. Including some high-risk investments in a diversified portfolio can potentially improve overall returns while spreading out risk. Thrill of investing. Some investors enjoy the challenge and excitement of investing in volatile markets, managing the risks, research and knowledge. Successful high-risk investing often requires thorough research and a deep understanding of the market. Diversification within high-risk assets. Even within a high-risk portfolio, diversifying across different types of investments can help manage risk. Risk tolerance assessment. Investors should assess their risk tolerance and invest only what they can afford to lose. Long-term perspective. Many high-risk investments require a long-term perspective, as short-term fluctuations can be significant. The role of high-risk investments in a portfolio. Incorporating high-risk, high-return investments can be a powerful strategy for those with the appropriate risk tolerance, knowledge, and investment time horizon. They can provide an opportunity for substantial growth in a well-rounded investment portfolio. Real estate investments. Real estate investment is a cornerstone in the world of wealth building. It's not just about buying property, it's about strategic planning and understanding market trends. Real estate can be divided into several types: residential, commercial, industrial, and land. Let's break it down. Residential real estate involves properties like houses, apartments, and vacation homes. Did you know that according to a recent study, the average price of residential real estate has increased by about 5% annually over the past 20 years? This steady appreciation makes it a reliable investment choice. Then, there's commercial real estate, which includes office buildings, shopping centers, and warehouses. These properties often offer higher rental incomes, but can require more significant upfront investments. For example, the commercial real estate market in the United States was valued at around $16 trillion in 2022, according to property investment expert. One of the key advantages of real estate investment is leverage. You can buy a $200,000 property with a 20% down payment and finance the rest. Over time, as you pay down the loan and the property appreciates, your return on investment can be substantial. Rental income is another major draw. The average rental yield in major cities can range from 3% to 8%, depending on the location and type of property. By owning rental properties, investors can create a consistent income stream while also benefiting from long-term property appreciation. Automated investment platforms, a revolution in personal finance. In our modern financial landscape, automated investment platforms, often known as robo-advisors, have emerged as a game changer. These platforms are designed to make investing accessible, efficient, and less intimidating, especially for beginners or those with limited time to manage their investments. What are automated investment platforms? Automated investment platforms use sophisticated algorithms to manage your investment portfolio. By inputting your financial goals, investment timeline, and risk tolerance, these platforms can create and manage a diversified portfolio tailored to your needs. Simplified investing. One of the main appeals of robo-advisors is their simplicity. Users don't need to pick individual stocks or assets. The platform does it for you. Low fees. These platforms typically charge lower fees compared to traditional financial advisors. For robo-advisors might charge a management fee of around 0.25% to 0.50% of your assets, significantly lower than the 1% to 2% often charged by human advisors. Accessibility. Many robo-advisors have low minimum investment requirements, making them accessible to a broader range of investors. Continuous monitoring and rebalancing. These platforms continuously monitor your portfolio, making adjustments as needed to align with your goals and market conditions. How do they work? Initial setup. You start by answering a series of questions about your financial situation and goals. Algorithmic portfolio management. Based on your responses, the platform's algorithm designs a portfolio, often consisting of a mix of various asset classes like stocks, bonds, and ETFs. Ongoing management. The platform will automatically rebalance your portfolio to maintain the desired asset allocation and adapt to market changes. Benefits. Diversification. Robo-advisors spread your investment across various asset classes, reducing risk. Disciplined investing. Automated platforms remove emotional decision-making, sticking to a predefined investment strategy. Efficiency. They can quickly execute trades and adjustments more efficiently than a human might. Examples of successful platforms. Betterment, known for its user-friendly interface and goal-based strategies. Wealthfront offers a range of financial planning tools alongside investment management. Vanguard Personal Advisor Services combines robo-advisory with access to human financial advisors. Investment in yourself. Last but not least, investing in yourself. This might seem unconventional, but education, skill development, and personal growth can lead to higher earning potential. So there you have it, folks. 4 powerful investment methods to help you build wealth faster. Remember, there's no one-size-fits-all approach to investing. It's all about finding what works best for you and your financial goals. If you found this video helpful, don't forget to like, share, and subscribe for more financial wisdom. Until next time, keep investing and keep growing.